Hello, my name is Julien Nillon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm exclusively dedicated to asset managers and specialized on French small caps. Last week, we have been working on the company Haulotte, and today I'm going to present our first analysis on this stock. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not do any business with Haulotte and do not hold any long or short position in its shares. Having said that, let's get started. Founded in the 19th century, Haulotte is a small family-owned company specializing in the manufacture of lifting equipment and more specifically mobile elevating works platforms and telescopic handlers. Equipment sales account for almost 90% of company turnover, and 80% of these sales are to major rental companies such as Loxam and United Rental. This makes sales particularly cyclical to the economic environment, but with a time lag due to order books. It should be noted that Haulotte, which has a turnover of around 500 million euro, is small but nevertheless global, with a commercial presence in all areas of the world, and industry in Europe, but also in the US and China. Haulotte has a long history, but the financial crisis of 2008 was a major turning point for the group. The company, which at the time was making almost 90% of its sales in Europe, saw its turnover divided by 3 and recorded heavy losses. Haulotte undertook major restructuring, but it took 4 years before it became profitable again. In fact, sales in Europe never recovered to pre-crisis levels. In order to face this new situation and to regain growth, the company undertook to develop internationally, in particular in North America and Asia. Thanks to this and few small acquisitions, Haulotte has managed in 2019 to almost reach its 2007 turnover. Unfortunately, also Haulotte managed to recover its levels of activity and margin fairly quickly after the financial crisis. This suffered an almost constant erosion from 2012 onwards. The group gross margin fell by almost 800 basis points over 8 years. This fall was primarily the result of a decline in price linked to, first, a sharp increase in competition linked to the arrival of new entrants, particularly Chinese. Second, chronic overcapacity in Europe as a result of the structural decline in this market. Third, the increase in customers' purchasing power as a result of the phenomenon of concentration of large rental companies. This constant pressure on prices and lower margins means that Haulotte was unable to benefit from the growth in its sales. Between 2014 and 2019, its operating profit remained stable, around 30–35 million euros. The COVID crisis, unsurprisingly, caused company sales and profit to fall again. Yet it should be noted that the downturn started before the crisis. In the fourth quarter 2019, sales were already down by 7%. The COVID accelerated the fall in sales to 50% in the second quarter 2020. Over the full years, Haulotte recorded a net losses, but managed to maintain a positive operating results thanks to a rapid adjustment of its cost and aid from the French state. Unfortunately, at the end of the lockdown, the rebound was only moderate. In the first quarter of 2021, the group turnover was still down. As we say, Haulotte is a late cyclical, and the major rental companies took their time to resume their investment and order again elevating works platforms. Order intakes are now picking up very strongly. That's the good news. Unfortunately, Haulotte is now facing a problem of electronic components shortage to operate. Sales, for instance, in the third quarter of 2021 could only increase by 9% despite a theoretically very favorable base effect. In terms of profit, the rebound is also, unfortunately, very modest. The group expects an operating margin of only 3–4% this year. It's well below the pre-crisis levels and competitors' levels. The bad news is that next year is also going to be very difficult. Haulotte has received and continued to receive many orders. That's very good news. Its order book is at its highest. Unfortunately, all these orders have been placed at a fixed price levels, and the cost of raw materials and production are rising. Steel price, for instance, have risen by more than 50% since the beginning of the year. If you take electronic components, the increase is almost by 30 to 40%. In this context, Haulotte should suffer a violent price-cost squeeze. Its gross margin is expecting to contract again. We expect for us 300 basis point drop, and eliminate and destroy all profit from higher volumes. For 2023, the commodity situation could improve, but other new factors could prevent a rebound in profits. First, growth could slow down significantly. But more importantly, price pressure could resume with renewed vigor, in particular as Chinese competitors gain strength. In the end, we fear that the group net result will no longer improve in 2022 and 2023, and will still not return to their already low pre-crisis levels by these dates. In addition to profit, we will also have to pay attention to the group debt. In 2017, the debt levels was at a very reasonable levels. But just before the COVID crisis, Haulotte debt has started to rise due to major investment, including an acquisition and the construction of a new headquarters. During the COVID crisis, the group has more or less stabilized its financial debt in absolute terms, but have seen its solvency and liquidity ratio deteriorate significantly due to its losses. As a result, in 2020, Haulotte found itself in a breach of covenant and had to ask its banks for a waiver. The turnaround in its accounts has allowed the group to return within its banking covenant this year. That's good news. Unfortunately, the levels of debt in absolute terms has not really decreased and now appears high in relation to the new underlying profitability of the group. The problem is that the increase in activity will lead to an increase in working capital, while at the same time we do not anticipate an increase in profit. The group should not be able, therefore, to generate a positive free cash flow. Now let's have a look to valuation. As we have seen, the outlook for the group is not great, but the stock has already significantly underperformed since the beginning of the year. Could the company be undervalued, therefore? Unfortunately, not. In our opinion, Haulotte is still far too expensive given its fundamentals. First of all, it's important to bear in mind the group's low stock reputation. The family-owned company does not have a great track record, its profits have often disappointed in the past, and its governance can be criticized. Above all, the company has low profitability with a ROIC of less than 5% and an operating margin 3 times lower than its main competitors due to a problem of critical size. Yet, despite that and despite the fall of its share price, Haulotte is valued at more than 9 times its EBITDA for this year. While Manitou is comparable but much more profitable French competitors, is trading at an EV on EBITDA of 7. A still generous EV on EBITDA of 8 and a P of 10 will seem much more reasonable to us, but we value the share at only 3.5 times compared to approximately €5 today. End of the story? Not yet. Haulotte is still far too expensive compared to its fundamentals, but these fundamentals could change if the company would decide to move closer to its French competitors, Manitou. In fact, Haulotte's main problem is that it is too small. The group is small but global and therefore has to bear disproportionate structural costs compared to its size. R&D and SG&A costs represent almost 20% of its turnover. For Manitou, which is 4 times larger, these costs represent less than 10% of its sales. Manitou can therefore post an operating margin of nearly 10% compared to Haulotte's 3 to 4%. But if Haulotte were to merge with Manitou, the company would change its dimension, benefit from an important commercial industrial synergies, and could drastically reduce its structural costs. Its operating margin could very quickly triple and reach the level of Manitou. Then, with the same multiples, Haulotte shares could be valued at €10. one formality remains, that the majority family, the 78-year-old president and his 56-year-old son, agree to lose their power to create value. That's it for today. I hope you have enjoyed this video. If you would like to know more about our opinion, you can contact us and order our first analysis pack that includes our presentation, our forecast and valuation model, a stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lperesearch.com. Thank you very much and see you soon!